This is the brief on gap analysis in trading. A chart from Forex Signal Hub demonstrates how sudden, massive price drops, called gaps, act kind of like temporary vacuums, pulling the market back up to fill the empty space before the original downward trend resumes. So first, let's focus on the creation of the gap itself. It happens during a strong bearish move, which really just means a sharp downward drop. The price drops so incredibly fast that it leaves a literal blank vertical space on your chart. It's kind of like a missing step on a staircase that the market naturally just wants to come back and repair. Second, we track the recovery phase. The price slowly starts climbing back up, creating higher highs and higher lows. It briefly pauses, forming this downward sloping flag pattern, right before a big bull or strong upward move totally breaks out of that flag. Now, with this big bull energy, you might wonder, is the market completely reversing for good? Well, finally, let's look at the gap-filled resolution. That strong upward momentum stops the exact moment it hits the dashed line at the top of the initial gap. Once the status changes to gap-filled, that invisible line acts as a hard ceiling, and right away, a brand new bearish move downward immediately takes over. Ultimately, a gap on a trading chart isn't just empty space. It's a highly